The market did not care about Moody's downgrade last week. As you can see, I kept the same drawings I had for my video and my analysis last week. And, you know, we had the Moody's downgrade on that Friday, May 16th. And basically, like I talked about in my last video, I looked back in history to the times where the other two credit rating agencies downgraded the US debt, which was S&P in 2011 and Fitch in 2023. And both times the market, sold off a little bit. And when the market opened on Monday, there was an overnight sell-off and it just recovered all that in that same day. So markets did not care about Moody's downgrade, but I was still expecting a pullback to at least this breakout level on SPY 576. This breakout of this swing high that we had in this downtrend that we saw earlier this year. And you know, I thought this headline was going to be the one to bring it right down, but it wasn't. Honestly, there wasn't that much news this week, except I think like Trump stating he wanted the tariff Europe 50%, which I mean, I feel like all of us, at least I am, like desensitized to those kind of news now, because over the weekend it was announced that he's going to pause them, blah blah blah. So with the markets figured that these tariffs are negotiation tools, and that's why I think we have seen such a strong rally. I mean, we're only like 5% from all-time highs here, and a lot of indications I was seeing back here was showing that this was a market bottom. So I bought shares in my long-term investments here, and I've been selling um, out the money puts to collect premium on this run up. Um, so at least we got this first back test, and it was a successful test so far. We sold down to it and we held it. Let me check the volume. It was on pretty good volume, right? Above average. This white line is average volume. So we were above that, so higher than average volume on that hold, which is a good sign. And I had these other two levels in place just in case we saw a breakdown, and I wanted you guys to be aware of the levels that the market could sell down to if that happens. But you know, seeing that futures are up over 1% right now, over this swing high support, we might not even see any more further selling down. But if we do, expect a down to the 571 level in that gap fill and the 50 SMA. Let me turn it on right here at 554. Well, now it's like 556. So yeah, just wanted to kind of cover where I left off last week. Um, and let me move on to checking out the AVWAP-Q indicator. So I talk about this indicator in every single video. Easy to read. Price action is above AVWAP-Q. That's bullish in the short term. Buyers in control. Opposite is bearish when price is below the AVWAP-Q line. And so we've been above AVWAP-Q basically since this long green candle on April 9th. We tested it, kind of did like a fake out here, and just have been above it ever since. So therefore, I'm still bullish in the short term. This line gets refreshed every quarter. So this line will not be refreshed for another month and a half. So as of now, I'm still bullish in the short term based off that indication. And we're also above all the major moving averages. Let me plot the 150 moving average. Well, with the exception of the 150, but we're above the 50, the 200, and the 100. And something interesting I wanted to showcase is I'm a big believer in the more confluence a technical indicator has, the stronger the reliance of it can be. So we marked out this 575 level, right? We had here. Look at that. It's confluenced with the 100-day moving average and the 200-day moving average all in one spot right here. That makes this one support level just that much more reliant. or more reliable. And so like, why is that? The reason why is because that means there's more eyes on that level. There are people who look at the moving averages only. There are people who look at these technical levels only, like the swing highs and swing lows. So when you got those two groups or more looking at the same level, that's more people interested in trading at that level. So far, we've seen that there are more buyers interested in buying at that level than short sellers shorting at that level. So this is a good sign. I expect this to continue holding. If we start breaking down below it, look, this is how I'll say it. I think if we hold this level and bounce from here and break this next swing high that we made at SPY 595, then we're going to go to all-time highs. We're definitely going to at least test all-time highs. That's almost a guarantee, I think. If we break below this level, I think we can expect more sideways movement. Not necessarily like making a new low, unless something drastic happens in the markets where Trump actually applies like a very high tariff permanently or something. But with the exception of that case, we're probably going to be trading within this range here of the moving averages, 50 SMA to the 150, maybe even this range here that we've seen with this swing low and maybe all-time highs, or maybe even this swing high. Oops. So somewhere I would say the extremes of this range could be SPY 613 and SPY 550. I can expect us to, be trading in between these ranges until maybe more clarity for the US economy comes into play. But regardless of whatever the market does, you know, I really recommend to strongly focus on investing. Every time you get a pullback, take advantage. If you missed out on some buying here, these pullbacks are still a good opportunity to buy shares on a discount. You're still 5% below all-time highs. It's still a discount. It's better than buying at all-time highs or above all-time highs, right? So if you missed out, spend some of your money on buying those long-term shares that are fairly valued or undervalued. And one good way to find that is by joining my free Discord server where I show 30 to 40 stocks that I believe are great for long-term investing. And I will show you my valuation analysis and my valuation estimate on those stocks. Um, Here's a really quick showcase. For example, I have Novo Nordisk here that has 3 out of 3 fundamentals rating, which I cover with a description of what each ratio means. It's in a bearish downtrend, which is fine. That just means that the moving averages are showing a sustained downtrend pattern. It has a grade A valuation, which I explain what grade A means, but basically it means a very accurate, I have a high confidence in this valuation, $95 a share, and obviously it's undervalued. I go over a PEGI ratio, which is a ratio I've used myself that compares a company's PEG ratio to its relative to its industry. Um, you know, so I have a lot of stocks in here that kind of show this kind of analysis. It's just supposed to save you time on what stocks to invest in. And these are stocks where you put your money in. You can go to sleep at night knowing that in 5 years, most likely these businesses will have grown their earnings, which means that they would have grown their share price. On the fundamental side, we had basically no news last week. Absolutely no news at all. So, whenever you have known economic news events, basically you can expect volume to be, especially with a holiday weekend, like Memorial Day weekend, expect like a very light volume trading week, very weak price action, very like unreliable price action. It could easily be reversed when the volume comes back and people come back. Next week, we actually have two good readings. We have GDP growth rate for the second estimate, quarter to quarter for the second estimate. Um, this is still for quarter one, but I guess they do a second estimate now that more time has passed and they have more time to refine their calculations. But anyways, it's forecasted to be about the same at negative 0.3%. A reading higher than this in the positives would be very bullish, because that would negate any negative GDP reading that we've had. And very important, we have personal income, personal spending. So these will kind of show the strength of the consumer. They're both forecasted to be increasing month over month, but at a slower rate than prior. And that's going to be on Friday. So Thursday and Friday are going to have news events. Obviously, we have really big earnings on Wednesday with that NVDA. So definitely keep your eye on that. Um, NVIDIA is one of the largest companies in the US markets, and it definitely has a potential to move the markets. Like I want to show you back in January on SPY, this gap, I know this doesn't seem like much now after we've seen, the tariff sell-off, but this was a really big overnight move in the markets. That was a minus 2% gap down overnight. That was caused by NVIDIA's DeepSeek news. If you guys remember that, end of January, right here, that was a 17% move down overnight. It was a 12.5% move overnight. That move on NVIDIA alone moved the markets down, right? So just keep in mind that when you have any trades going on, that you're keeping in mind that Wednesday we have NVIDIA earnings that could move the markets if NVIDIA reacts very strongly to it. Um, I think that's all I got for you. So good luck this next week, and let me know if you have any questions or comments. I'm always here to answer questions and to help you guys out.